Hello and welcome to Panther Financial Services. This is Pranav Patil. Today we will discuss, is ETF good option for an investment? Now we will start with this discussion with understanding of what is ETF. ETF is nothing but exchange traded funds. Now word says exchange, stock exchange, traded, which trades on the exchange, and the fund. The fund which is trades on the exchange is called as a exchange traded fund. Now, what is fund? Basically, basket of securities. It's called as a fund. There are different securities you will find in a particular basket. It's called as a fund. So, basket of securities which trades on the exchange is called as a exchange traded fund. Now, this basket can be decided by the fund manager or the person who drives this fund. It is slightly different from the mutual fund. Mutual fund is not traded on the exchange, but ETFs are traded on the exchange. It is same way like you buy the HDFC stock or any other bank stock or any stock, you sell it after some time. Similar way, this funds also trades on an exchange, and you can buy and sell like a stocks only. Now, uh, we will understand how from how this fund is derived. The fund, there are different type of ETFs fund. First is stock ETFs, then sector ETFs, then index ETFs, then you'll find different philosophical funds. Basically, it total depend on the fund manager, on what basis he decides the security into that basket. Now what is stock? Basically, the fund manager thinks, okay, I decide higher dividend stocks in a particular basket, I will invest that money into those securities only. That's called as a stock, as a dividend stock based ETF. Or maybe, I am bullish on the pharma sector, or I am bullish on the IT sector, I create the group of securities of pharma sectors or IT sectors, and I invest into that. That's called as a sectorial based ETFs. Third is like an index based. Like, you have a Nifty 50 or Bank Nifty. So Nifty 50 has a 50 companies, so indirectly that investment goes into that 50 companies only. Now what happens when you buy ETFs, say in a quantity, one or two quantity or three quantity. Say if you invest 1,000 rupees into that, that 1,000 rupees is invested into that basket of securities. So what happens if you wanted to invest into Nifty 50 companies? You have to select each and every, different trades you have to place it. Let's say SBI one trade, second is HDFC, third is XYZ. These are the 50 trades you have to put it. But if you buy the ETFs, you don't need to place the different trades. You can, trade with the one trade only. That's the benefit you get it into ETFs. Now, who should invest into ETF, or what is the is it a good option for an investment? Basically, those people who are not aware about the stock movement or the stock, they are very, they feel very they are fearful while investing into direct equity investment, and they can, select this group of securities indirectly via ETFs. Basically, those who are not have a experience investing into direct equity, they should opt it for ETFs. Now in the ETF you can do a trading activity as well, like a stock we do it. So you can buy it, you can decide your target price, you can sell it out. That, the benefit you get it, like you do the cost, you save it. Suppose if you wanted to invest into 50 securities, you directly buy the ETFs of those 50 securities. Indirectly, your cost gets saved. Different trades you place it, then the cost will occur for those trades. But in the ETF you place one trade only. Now second, the proportionate, the risk parameter. If the stock gets hammered, particular stock, for a specific reason, it may hammer one stock only, and if you have an investment into that, it may hammer your investment as well. But in the ETF, it is a group of security or the basket, so it won't hammer as max as the securities. So on the other side, this is the negative side. The positive side is like, in the equity you may get a higher returns as well compared to ETFs as well. This is the both way it works. Now, the third point is that those people who are looking for a secured investment like a mutual fund, they should invest it. Fourth is those people who are looking for purely long-term investment, and they have a faith on the Indian economy or the economic activity. They feel that the future is bright and they wanted to invest from a long-term perspective, and they are hesitant to go for a stock specific. They should opt for a ETFs. Now, sixth is those people who are looking for a trading activity like a self-employment perspective or short-term gain perspective. They can also opt for a ETFs, because if you have a very good amount of money or the quantum, you can do a buy sell activity in the ETF. There are a lot of companies or a lot of big funds who use the ETF for an investment into market for short-term gain perspective. Now, when this ETF started, ETF was started in 1993 by Street Street. I'm fortunate I was working for that company. That company started in 1993. It worked very good way in the 3 years till 1996, and that's the reason it was accepted globally. Now, almost every country you will find the concept like a ETF, exchange traded fund. So this is all about the exchange traded fund. It is slightly different from a mutual fund. It is not a mutual fund. Mutual fund you can't trade it, but ETFs are traded on the exchange. Now I explain you what is ETF. I explain you who should invest it. Now, what is the precaution you have to take it? If you are a long term investor, don't watch it regularly. Invest it from a long term perspective only. It will be a very good option for wealth creation. If you have any doubts on this or any query, you can mention in the comment box, or you can WhatsApp me as well anytime for that. Thank you for your time. Have a great day ahead. Thank you.